Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? It's Wednesday. Welcome to the Wednesday morning edition of the Daily Market Commentary. The markets this morning are down a few points as the S&P's down 2, the Nasdaq's down 4, but a little bit of an overnight recovery from yesterday's sell-off late in the afternoon. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell to get the alerts and the updates as they happen. Let's go ahead and dive in to today's movements. So S&P down 2.5 points. We did have a potential for a breakdown off of this low. However, we didn't get the true basing in front of the zone. So looking at yesterday's price action, we've got this little wick over wick area here that I was kind of taking a look at for a potential reversal. I don't really love the time of day. That was created. So while I like the fact that it's a former area of resistance in the past and an area of support, my time of day is a little rough. So if you like this level, I think it's okay to take it. But it definitely gives you a little bit more risk and exposure in a sideways price action, which is essentially what we have here in our 4-hour. Not technically sideways. Technically, we're still in an upward trend. But on our 1 hour, looking at that little wick over wick area here, we'd have to wrap our lines around here. Now, in doing so, technically, our stop should be way up here. Well, that makes that level, about 15 points wide, which I think is going to be too wide for a lot of traders. So how can I find a good place to place my stop? Because I want my stop to be either above the wick on the leg in or above the pivot. So what I have to do is go to a smaller time frame in order to find where I might place that stop. So when I go to the smaller time frame, what I get is this picture here that shows that this 15-minute chart has a little bit of a leg in that I can use as my closest possible stop. So to me, this becomes the closest possible area for a stop in this trade. Now, remembering, though, that we still have to be able to get at least a 2-to-1 reward to risk. So when I look at it, that means that my risk is this distance, and I would need a 2-to-1 reward to risk to make this worthwhile. Well, as I look at what I have right now, that distance there would be 2-to-1. If we base inside of this level, then we're going to be inside the 2-to-1 reward to risk. Now, what that would do is lower the probability and lower our score, because we score all of the trades that we take using our trade operation plan. We call them top performing trades. The trade operation plan, if I score this, would give me a lower probability on two fronts. Front number one, that I don't have a 2-to-1 reward to risk. The other place that it would give me that lower probability is that I'm looking to short in the context of what is still technically an upward trend. Now, technically, it's an upward trend that is losing a lot of momentum and steam. And so even if I call that trend undefined, the best I could do with this trade is make it a confirmation entry because of my reward to risk ratio. Now, we looked at this last night during the live our Q&A session, and it looked better last night. Well, that's because last night prices were down here when we were looking at it. So when we were looking at it last night, prices were down here. We had a much cleaner 2-to-1 reward to risk. So I'm still going to leave it on as a potential, because I think it could be a potential, but we've moved it to a confirmation entry just to be a little bit more safe. All right, next, let's look at the NASDAQ. So in the NASDAQ, we had this level here, which has actually turned into a bit of a touch-and-go move off of this demand area. Now, unfortunately, we had it set as a confirmation entry, and we've gotten just a little bit of a move away. I think it's still okay for a confirmation entry, but similar to the S&P, this is actually a cleaner wick over wick supply area here. Similar to the S&P. In this case, the stop would be somewhere up there. So you've really got a level here and a level up above. You've got kind of a level on top of level here when we look at the NQ. So you got two areas of supply up above us there, knowing that our 4-hour is now the Nasdaq's actually given me a lower swing low, but I don't have a lower swing high. So if we reverse here and we get a lower swing high as well as a lower swing low, then by the definition we will have switched from a sideways market to a downward trend. So keep an eye on those areas today. Crude oil, we had a tweezer top that showed itself yesterday, and we got a pretty big sell-off of that tweezer top. Price has now reverted back to this area here, and let's see if we get a little bit of a move away from this area. I still think we're in a 4-hour price action market, so it bears to say that we should probably just continue to go sideways. So those of you that were in our live trade room on Sunday night, our iron condor is still working out extremely well in crude oil. So the time decay has rewarded you on that one. And then gold, looking at gold, we're also kind of still in between our levels of demand and supply. So both crude oil and gold are in fairly sideways price action with not a lot of movement to speak of. In our bonds, so taking a look at the ZN. So the ZN, which is our 10-year note, we had a move into our demand level and got a very nice move away from our demand level. So let me know in the comment section down below if you're able to catch that demand level, and it rallied up to the opposing supply. So let's talk about that opposing supply. This opposing supply was found on a 15-minute level. So I got to move from the hourly chart to the 15-minute level. And what you'll notice, we got to move in 1, 2, 3, 4, 5. After 6 candles, the market had gone basically nowhere. And this is one of our rules, is the 6-candle rule. And if after 6 candles your market is basically nowhere, at that point you take your stop and you move it to break even, or you take a very small loss on the trade. Either way, the reward from the 60-minute trade on the hourly move up more than covered the small loss, if you took one at all, on the 10-year note up here. And that's how we manage our positions in order to protect ourselves longer term. So looking at this on an hourly chart, we still have some breakout candidates. If we get some basing in this region, and I keep moving this circle over to make sure that basing has to occur inside of this area, we could have a breakout to the upside to run this thing up. In the Aussie, so our Aussie breakdown is working out really well. So if you took the Aussie breakdown, we gave you another bite at the apple yesterday. You've got really a couple of opportunities on that Aussie breakdown. At this point, I would take your stop and move it down into here to lock in some profit. I think that we may see another breakdown attempt here. So keep an eye on that. See if we base in front of there, we get another breakdown opportunity. The euro level. So we had a 15-minute euro level that hit yesterday. So looking at that, let's move to a 15-minute chart. So on our 15-minute chart of the euro, we got a little move in and then just kind of died and petered out on us, right? Well, it came to its opposing fair price value area. So if I look at this little sideways price action, we came into this area and popped up to the one closest to it. So this may have invalidated the trade for you based on the reward to risk ratios, but if you took it, you got a little bit of a move away from that zone. Now that zone has been shown to have broken, so we would anticipate price kind of continuing to roll over. Looking at this on a 4-hour, we've actually gotten a fairly deep pullback. Keeping an eye on both of these demand areas, I really like this little area here of supply above us. I think there's a better chance that we kind of continue to fall off of that hourly chart in the euro. So that makes these levels a little bit lower probability because our trend direction in the big picture has changed. Canadian dollar. So our Canadian dollar is also showing a bit of weakness. Set up for a little bit of a double top. We had a little bit of a breakdown here yesterday. We talked about getting short below here if you were so inclined, and we broke down from that level and got a little move away. Now when I look at price, I see we have a little bit of this, and so technically with this you can break out either direction. Usually it goes in the direction of the predominant trend. On a 4-hour chart, that would be a breakout to the upside, but we could break out either direction on this. So depending on your risk tolerance, if you wanted to take it, it then sets up for potentially price moving into this reversal zone. Great British Pound, Japanese yen. I've been talking for a couple of days about the feeling in my mind that the pound was setting up for some sort of a rollover, and we're getting a little bit of a move away and a pullback from that region. Looks like Brexit is going to be delayed, and so look for a potential breakdown below this line here if we get a bit of a pullback here. But it looks like we've got another delay in the Brexit happening as Parliament passed the vote, but they did not pass the timetable, so there was that as well. And then in the Japanese yen, we've actually rallied up from potential breakdown point, rallied up from that potential breakdown point, but still have an opportunity to come back down and into it later today. So keeping an eye on that zone. Tomorrow morning, we have our live trade room. So if you want to join us in our live futures trading session tomorrow, go to tradersarmy.com. This is our free preview week, so get a chance to peek behind the curtain and join us in our live trade room tomorrow morning. I look forward to having you there. Until next time, everybody, have a great day. See ya.